this is MrChris. This video is the second part in the series of Mastering the Will Strategy, a simple guide for generating retirement income. In part 1 of the series, I shared with you my perspective that trading options using the will strategy is an insurance business. Therefore, I do not measure my profit and loss on a per trade basis. Instead, I measure my profit and loss using the cash basis accounting system over a period of 1 year. Now, before you can trade options using the will strategy, you will need the right brokerage account. And if you are retired and just getting started with options trading, I know it can feel overwhelming. In today's video, I will walk you through the types of brokerage accounts that you can use for options trading and the options trading approval levels. First, a disclaimer. I'm not a financial advisor, and the content of all videos in my channel are for educational and entertainment purposes only. Please do proper research and due diligence when investing. And if you like the content of my videos, please subscribe and click the like button. I would appreciate it too if you post a comment or questions regarding the will strategy or investing in yieldmax ultra high yield funds. Okay, let's go. Most brokers offer several account types. For options trading focused on retirement income, here are the two main ones to consider. Number 1 is your individual taxable brokerage account. There's no contribution limits, fully flexible for options trading, including the will strategy. However, dividends, premiums, and capital gains in this account are taxable. The second one is your traditional IRA account or ROTH IRA account. Make sure to find out if your IRA account allows option tradings. Most brokers limits options trading in an IRA account. If your IRA account is not allowed for options trading, you need to request approval from your broker. Now, I mentioned in my previous videos that I trade options using the will strategy inside my traditional IRA. Since I am trading inside my traditional IRA, I am not concerned about the tax consequences on each trade. I am only taxed for the amount of cash that I withdraw from my IRA. For example, in 2024, the total amount of dividends I earned from yieldmax and in trading the will strategy is more than $200,000. I pulled about $50,000 from my IRA account last year, so I only have to pay tax on the $50,000 that I withdrew. It would be best if you trade inside a Roth IRA because you don't have any tax consequences at all. Now, of course, if you have a regular individual brokerage account, then all your earned premiums minus your losses will be taxable on the year you earned them. Once your account is open, you need to get approval from your broker to allow you to trade options. Brokers assign approval levels based on your experience and account details. The option approval levels determine what types of option trading strategy is allowed in your account. Some brokerage firms have 4 approval levels, while others have 3. Now, my brokerage account is Fidelity, and Fidelity only has 3 option trading approval levels. Fidelity called them the 3 tiers of trading options. I will cover these 3 tiers of trading options under Fidelity. Note that other brokerage firms may have different approval levels. So the first one is Options Tier 1, and this includes buying calls and puts, selling covered calls, rolling covered calls, selling cash covered puts, long straddles, and straddles. Now, I will not discuss straddles and strangles because we don't need it for the will strategy. The second tier includes the same option tier 1 approval level, plus it allows you to trade option spreads. And the third one is option tier 3, and this includes the same approval level as tier 2, plus it allows you to sell naked puts and naked call options. Naked means no collateral. Selling naked put means selling put options without any reserved cash to cover your position, while selling naked calls means you do not own the stock that you use to sell call options. These are very risky options trading strategies, but can also provide very high rewards. In order to trade options using the rules strategy, you only need to be approved for Tier 1 options. If your brokerage firm has different option trading levels, you need to be approved for a level that will allow you to buy call and put options, sell cash covered put, and sell covered call. For trading options using the wheel strategy, you do not need to learn more complex or advanced option trading strategies like option spreads, iron condor, straddles, or strangles. Using the no-loss method of the wheel strategy does not need any complex and advanced option trading strategy, and that's the beauty of the wheel strategy. To be approved for trading options, your brokerage firm will likely ask you to complete and answer a questionnaire form. Your broker will want to find out your experience in trading stocks and options and may require a minimum amount in your account. When applying for options approval, be honest about your experience. You don't have to be an expert. Most brokers allow you to apply for higher levels later. You may need to share your income, net worth, and investment goals. And also don't rush. Start with what you are comfortable managing. Treat this like a long-term income plan, not a race. Like I said, trading the wheel strategy is not a get-rich-quick scheme. Rather, the objective is to generate reliable retirement income. With regards to the brokerage firm to use, here are some firms that you might want to consider. Of course, Fidelity. Like I said, I've been with Fidelity for a long time. Charles Schwab, now E-Trade. I used to have an account in E-Trade. Now, of course, Robinhood and Weibo. But first, you need to do your research before opening an account if you don't have any account yet. Like I said, I've been with Fidelity for ages. Many companies use Fidelity to manage their employees' 401ks, and the companies I worked for in the past use Fidelity for the employees' 401ks, hence my IRA account in Fidelity. Now, I'm not affiliated with Fidelity, so this is not a commercial for them. One thing I like about Fidelity is that Fidelity will try to get you the best premium for your option trades. For example, when selling cash covered put options or covered call options, I always use the bid price. Now, the bid price is what current option buyers are willing to pay for the contract, while the ask price is what other current option sellers are willing to sell the contract. There's always a gap or difference between the bid price and the ask price. The ask price is always higher than the bid price. By accepting the bid price, I can easily sell the option contract fast. Now, once I send the order, Fidelity will then try to get a price better than the bid. For example, if the bid price is 25 cents per share and the ask price is 30 cents per share, Fidelity might be able to get a 26 cents per share for my order. And that's what I like about Fidelity. I'm not sure if other brokerage firms do the same thing. In summary, to start trading options using the wheel strategy, you need a regular taxable account or an IRA account where you can trade options. Once you have an account, you need to get approval for options trading. And the type of option strategy that you are allowed to use depends on the option trading approval for your account. To trade the wheel strategy, you need only be approved for a level that allows you to buy call options or put options, sell cash covered puts, and sell covered calls. That's it. In the next video, I will work on how the wheel strategy turns options into a reliable retirement income. And after that, we'll go into the basics of call and put options. Now, thank you, and I will see you in the next video. If you like this video or any of the videos in my channel, please hit the like button and subscribe, and join me in my journey in generating my retirement income through trading options and investing in high-yield funds like yieldmax. If you have any comment or question about the no-loss method of the wheel strategy or my perspective about yieldmax, please write a comment and I will answer them the best I can. This is Mr. Chris. Thank you, and I will see you in my next video.